Hey, this is Drew Page. Welcome to the Drew Page channel. Over the last couple days, I did a video where I basically showed that Kevin had changed the way that he's viewed his philosophy from trading to investing and some of the justifications that he's given. And over the last few days as well, he has been putting out videos that essentially are dogging people on YouTube who are doing videos that say you should be a long-term investor, and that the people on YouTube who are giving advice are treating their audience as stupid if they are talking about dollar cost averaging and long-term investing and things of that nature, and essentially saying that he has transcended the YouTube space with his trading philosophy of being able to study what the market's going to be doing based on the Fed and macro cycles. And so with that new education that he has now, he is giving a more intelligent view of the market. And in this video, I want to talk about why he's wrong. So here's kind of a short clip of his recent philosophy about his view on macro cycles and the investment information that other YouTubers are giving on YouTube.
I do not want to be out of the market. But we can't put our head in the sand with some of this overly simplified information. And you always think it's kind of comical that folks justify oversimplifying the content they're providing because they're almost trying to call their audience stupid. It's like, don't worry. The ultimate answer to everything is just be a long-term investor. All right, fine. That's fine. And I recommend that too for probably 90+% of individuals. But for those who are worried about cyclical changes in markets and how we could go from a higher point in either an equity cycle or a real estate cycle to a lower point, well, that's what we're tracking and watching.
Now, this take, in addition to being extraordinarily condescending, assumes that you are able to make that right judgment of when the market bottom is going to hit, or at least relatively close where it would hit, and that you can find that better than the people that are on YouTube who are saying you should be buying the dip, dollar cost averaging on the way down. So this is a new Kevin, and he's put a video out too about flip-flopping. You can check out my other video on that, and basically, he's going back after those who are accusing him of flip-flopping. And I don't really care about the flip-flopping part. I just want to understand and hear from the investing Kevin rather than the trading Kevin. So there are clearly two Kevins here. There's the Kevin of today, which is a trader, and then there's a Kevin of yesteryear who was an investor. And that's the Kevin I want to remind everybody of. The Kevin that we all heard and loved on YouTube, who was a genius, who at 2020, at the market bottom in March, gave such great advice that he ended up turning his portfolio into millions and millions of dollars. And it's kind of like when he calls Grant Cardone out on saying, why are you saying we have to have 16 and 32 units because that's not how you started. It's basically the same thing. Doing this trading and all these other things is not how Kevin started. This is how Kevin started.
Most of the time, I hate to say it, most of the time when the market's going down, we're sitting here like this. Market's down again. This sucks. I should probably buy more, but I'm just gonna wait until it's down 30%. Oh, and then I'll rebuy.
I mean, don't you miss that Kevin? That Kevin is hilarious. I mean, that the mug and the beer and saying, oh, I'm going to wait for the market to fall 30%. I mean, that was funny, but true. But now today he's doing the exact same thing that he was criticizing other people of doing in the past. And he puts in this video 3 tips of how to protect yourself during market crashes. And I went back and saw this video on how I'm investing during the 2020 market crash. And he gives 3 tips and tricks to help trick your mind into being okay during a market crash. The first one is he talks about being diversified among 3 different classes: real estate, stocks, And I think he says gold in there. I have to go back and look at that again. I'll put the link to the video so that way I'm not taking anything out of context. And if I am, please feel free to call me out in the comments. And by the way, while you're there, please subscribe to my channel and like this video. And don't forget to hit the notification bell. But anyway, in this video, he gives these 3 tips. The first one is the diversification. The second one is he takes gives a hat tip to Ray Dalio and says, okay, sell a little bit of your profits, have a little bit of an insurance policy so that if the market drops, you have a little bit of cash that you can drop in as an insurance policy so that if the market falls, you get to make some money. And if the market doesn't fall, you still are mainly invested in the market, and so you just have some extra cash. You can either reinvest it later or just keep holding it out for cash in case you have a bear mindset, and nothing's hurt by that. But the real key that I want to point out here is what he would now consider to be 3rd grade or 5th grade YouTube advice. Listen to this.
Let's say you have $5,000 that you want to get invested into the market. Yeah, we're going to put the money into the market, but we got to wait for the bottom. Here's a better idea rather than waiting for the bottom. And this is just something that I do. And maybe it's stupid. I don't know. Sometimes I feel like I do things that aren't super brilliant, but I try to do the best, okay? The best I can.
So this is something that he says he does, and he says that it might be stupid. Well, Kevin, I can 100% guarantee that what you are about to say is not stupid. And if you stay to the end, everyone watching, I'll be able to show you why.
So the trick is you take that $5,000 and rather than saying, okay, I've got my $5,000 ready to invest, and then you're looking at the market every day and it's like, okay, let's put it to today. No, let's wait until tomorrow. Oh, let's just wait until next week. And then all of a sudden everything's green again and you kind of never invest that $5,000. Here's, in my opinion, a better trick. Invest $1,000 of it today and use just $1,000 to get in the market today. Then, when the next trading day comes around, if it's red again, invest another $1,000. If it's red the next day, invest the other $1,000. And now, incrementally place your $1,000 into the marketplace.
There he goes, giving that 3rd and 5th grade advice on investing, just like all the rest of the YouTubers. What's he talking about, folks? He's talking about dollar cost averaging on red days. And that is excellent advice. Anytime the market's going down, you put some money in the market. Every single red day. I wish I could put $1,000 every single red day. What I do, and obviously you have to do what's best for you, but for me, on any red day, I take the higher number of the Dow or the NASDAQ, whichever one of those 2 numbers is the highest, and I put that amount of money in the market every single red day. And I've been doing that since the summer of 2020. And the reason why I started then is because I didn't listen to Kevin here in March of 2020. And if I would have listened to him rather than the talking heads on CNBC who were saying, oh, there's another dip coming, there's a second dip coming, it's coming, I promise you it's coming. And if I would have listened to Kevin and this idea of dollar cost averaging, which I had not heard of, I was relatively new to investing. I was a lawyer who knew how to make a lot of income, but didn't know how to invest. And I was watching this and I was like, well, this is probably good advice, but everybody on CNBC and all these guys who are running funds are saying, hey, there's a second dip coming, so I need to wait for that. And it never came. And if I would have followed Kevin's advice, I would have made 6 figures more in my portfolio than what I did because I missed the bottom by a couple months. Just that little bit made that much of a difference. So this is excellent advice. And it's not 3rd and 5th grade advice. This is just good financial long-term investing advice. And it came from the genius, Meet Kevin, who is disregarding this great advice that he came up with. For whatever reason. Now, obviously, I don't have a $40 million portfolio. So I'm sure that if I saw half of my stock portfolio evaporate in a matter of weeks, I would probably hit panic mode too, just to be honest. I mean, I can't even imagine what that would be like. But even if you decided to sell out, okay, then follow your own advice about getting back in incrementally on the way down instead of just holding it, trying to time it just right, right? I mean, that just makes sense. I mean, what you are saying in this video makes perfect sense. And so, you know, I hope you're right, Kevin, because I want you to make as much money as you can. I'm not interested. It doesn't do anything for me for you to lose money. It does nothing for me. But I want to make sure that those who are watching this video understand that this is the way to wealth, is by incrementally dollar cost averaging on red days, getting the money into the market, and then when it turns around, it ramps up. I mean, that is just the way Kevin got wealthy, and that's the way you can get wealthy. So I think that's great advice. But then he goes on to explain why. So listen to his explanation on that.
Why? Why would you do this? Here's why. If let's say you have $5,000 to invest now and you put it all in and the market goes down, you're gonna feel like crap. You're gonna feel like you made a bad decision. That's gonna jade you against making future stock purchases. You're gonna tell yourself, man, I knew I should have waited. And that's really bad. Now, if you put $1,000 in and the market goes down more tomorrow and you put another $1,000 in, you're not really feeling bad about your first 1,000 because your second 1,000 locked in those lower prices. And if it happens again, perfect. Lock in another lower $1,000. Now, if the market goes up though, at least you've bought 3 days in a row, and if the market's up, great. Cheer about the money you're making on your first incremental purchases, and then you can decide whether you want to invest the rest. But the psychology of making incremental purchases in stocks is so much better than marrying yourself to the price of you making a big $50,000 investment and being stuck to this number.
Why not go ahead and just wait and put that $50,000 number on the low market date? I mean, he talked about all the stress that it causes and the anxiety of looking each and every day. Whereas if you put in that lower amount psychologically, you understand that you're not losing anything because each time you're putting some more money in and putting some more money in. Now take that 50,000 and put another couple zeros there, and then you've got what Kevin's dealing with, which is he's holding $20 million, or roughly, I don't know exactly how much it is now. I'm sure he'll do a video on it at some point. But he's holding this big stack of a portfolio and he's waiting to drop it in the market on a particular day, which is exactly the opposite advice that he's given in this video for someone who's looking to put in $50,000 in one fell swoop. And so if you're watching this, make sure that you follow this Kevin's advice, not the Kevin of today. Follow the March 2020 Kevin, not the Kevin today. If Kevin wants to be a trader, that's his prerogative. And people hating on him for being a trader, you're wrong. You shouldn't do that. Now, you can call him out on his explanations about why he didn't mention it on the live stream versus the fact that he had to create some elaborate video about it. You can criticize him for saying that I'm not effing leaving Mint. I'm not leaving YouTube, even though he did, rather than I'm not leaving the market. You can criticize him for those things, but you can't criticize him for how he wants to spend his own money. Or you can, but you shouldn't. It's wrong. But that being said, you can still look at the two investment philosophies and say, which one of those makes the most sense for gaining wealth? Well, how did Kevin gain wealth? He gained it through the March 2020 way. So that's the Kevin you should listen to. So I hope you found this video helpful. Please subscribe to my channel, like this video, hit the notification bell, and until next time, stay tuned.